Hello, everybody, and welcome to the Gold Rush. I am Sam Gatlin, an editor at All Star Charts Gold Rush, joined by my better half today, Mr. Jason Pers, coming to us live from Ohio, a great state in the Union. How's the football going this year, Jason?
Oh, I mean, it's boring as hell watching them blow everybody out, but I mean,
They need some competition.
yeah, it's literally just watching a blowout after blowout each week. They had one good game this whole season, but that was it. So like they're just blowing everybody out, which is good, but they need to test. The quarterback's pretty small. I think he's a freshman. So once again, it's a you kind of need to put him through his paces. He's got a great arm though, man. His passes are so on point, it's insane. So it's been fun to watch it. Good year so far, but a normal OSU year where we just win everything a little bit too easily.
Must be nice. Must be nice.
I mean,
Um,
I like seeing the scrapping. I'm from Cleveland. Like, my favorite thing
totally.
in the world was watching LeBron's 3-1 comeback. Like, so like, I like that type of game, but this is just I know they're gonna win every time I look at the screen and yep.
The NBA is starting back up now too, so you can start talking about the Cavaliers on this show. But I know people are really here for the precious metals, the
No,
macro,
Sam, they're here to hear about the Cavs. They're here to hear about the Cavs.
Hey, the Cavs have a good team.
They do have
Donovan
a really
Mitchell.
good team. But you know who does have an even better team? OKC this year.
Yeah, let's go.
Hmm.
We're gonna two-peat. We've got somebody in the chat saying we should change the name of the show to the Silver Rush. You know, Jason, if we hit a close above 50 in the silver futures, I think we should do that. That's a great idea. Keep the good ideas coming, everybody. If you're watching this on Twitter, go over to YouTube so we can see your comments. We love interacting with all of you during these shows. It's what makes it a fun experience for us. It's not just us getting up here and talking about what we're seeing, but we want this to be an interactive experience. Yeah, but anyways, let's talk about what we're seeing, Jason, because there's a lot happening right now, and I think it would be a crime to not start with slide number two. Mr. Jean Gauthier, slide number two. We've got silver futures with quarterly candlesticks. That's right, we need to use quarterly candlesticks to show all of this data because this base in silver goes back to 1980. And it took, let's see, that is 31 years to get back to 49, which is the level it peaked in 1980. And then you peaked there again in 2011. And here you are 14 years later, testing 49 once again. Jason, I put a rocket ship on this chart. Usually I just use a little green arrow. But, I think the resolution from this base is going to be explosive. So I felt it would be irresponsible to not use a rocket ship. However, Jason, I'm not convinced we're going to see it right here, right now. Do you think we need to cool here for, I don't know, a few days at least? Or are we just going to slice right through this level like it doesn't exist?
Yeah, and Sam, these huge bases. Like this is the thing that we study so much over here, which is these huge bases, sometimes they just go straight through those zones and never look back. I
You say that it's probably the lower probability outcome, though, right?
I don't know. So here's the thing. So what I would like to see, and this is what the market doesn't care about. So the market doesn't care about what I'd like to see. What I'd like to see is us consolidate either right below this level, right above this level, and then move higher. What's possible here? It could bounce off this level and cut much lower for a second. I would be surprised to see it go, anywhere below 45 at the moment, but we'll see. I think it'll still hold trend and then move higher. It could just consolidate sideways and then move higher. It could break out and turn resistance into support, which would be the most bullish thing, I think, and then consolidate sideways and move higher. But right now, like it's like you just gotta stay long and ride the volatility. Volatility is gonna suck. It's silver. It's a very volatile product. Just be ready for it. So, some people are writing me today. Oh my God, it was up, a couple percent. Now it's down a few percent. Like, how do you trade this thing? And it's like dude, it's silver. It's a commodity that moves around quite a bit. It's very volatile. Sam, you talked about the risk adjusted return the other week on gold and how it's just a very low volatility return. But if you look at silver, it's not the same thing. It's very volatile, it moves up and down. So I think that this is going to play out the way it should, which is nobody will know. Nobody will be able to guess. What I can say is like this chart just says, be long over 49. Just simple as that. Like if you don't have a position, get ready to be long over 49. This thing could absolutely hit 75, 100 pretty easily. I'm sure the target for this base is pretty up there. Like some people will say, like, no, it's 50 because you add no, like this is a huge base going back to 1980, 50-year pattern. This could lead to 100, $200 silver, but it might need some time. I kept saying $50 silver by year end. We hit that much sooner than that. So I don't
Hell of a call, Jason. Well
it,
done.
it was a great call, but I'm surprised. Honestly, surprised that it worked out the way it did so quickly. But now I'd say because it worked out so quickly, sometimes you see things correct through time, and this might be one of those tight consolidations that lasts a little bit and then we move higher, or it could just blast through here, prove me wrong, and just never look back. Um, I'll just tell you my position. My position is I'm long silver, I'm long gold miners still, right into this zone. If we make it above this zone, I think if you don't have a position, you start to add to your portfolio there. Also, another thing that's a good sign, people keep asking about this, and I want to bring it up before I forget about it. The premium to the spot price compared to the futures price. Sometimes this happens. And one, if it's like a long term premium, where we'd see the gold spot or the silver spot price over the silver futures for a while, like let's say this is, over a month, I would say, okay, that's extremely like probably getting to the point where that could be frothy. Like that could mean we could turn down a little bit here today on a 1 day move, silver hitting $50, probably people running to stores. Like you got to think like people have waited for that level since 2011. So people maybe heard about it. They're going to stores, they're buying all the spot silver that they possibly can at the moment. These premiums happen. I'd assume by tomorrow or the next day that premium will be gone, and it'll be probably around the same price as the silver futures once again.
That's interesting, Jason. And another thing I'd like to note on the silver futures, I've posted some silver charts on my Twitter and, pointing out this like 49, $50 price that was the peak in 1980 and 2011. And some freaks, Jason, keep telling me that inflation adjusted, the 1980 peak is like $600 in silver. So silver needs to go to $600 to get back to the same as it was back then. And I don't know. I'm here to tell all of you to block all the people that are doing that. Just completely ignore that lunacy because dividing something as pure as the silver price by something as arbitrary as some inflation data point is just a terrible idea, and it's going to make you make poor decisions and it will hurt your wealth. So
Yes.
ignore all of that nonsense because I'm here to tell you it's nonsense. Price is the only thing that matters, and it doesn't lie. The peak in 1980 was $49. It wasn't $600 based on some inflation adjusted nonsense. So I had to get that off my chest.
No, it's true. I agree.
And next, Jason, it's not just silver that's ripping, but we have a ton of intermarket evidence suggesting that it's a raging bull market for precious metals. One of my favorite charts to highlight this is gold relative to the Dow Jones Industrial Average, or what I like to call Papa Dow. And you can see a massive bearish to bullish reversal pattern that's just now breaking out and making new multi-decade highs. So this looks like a brand new primary uptrend for gold relative to stocks. And, it's been a raging bull market for, I don't know, 17 months now for gold. But, the outperformance hasn't really started until now. So I think this has legs and it could last much longer than people expect.
No, I agree. I think this thing is really just getting started. Now, that doesn't mean that we're going to see gold be the leader forever. It just means that we look more through this and we look more through these other commodity-based sectors, we're seeing that rotation continue. And if that rotation continues, we're going to see outperformance in the commodity-based sectors for a long time. Aluminum miners are finally starting to catch a bid. Steel is just breaking out to new highs. Lithium miners, uranium, and so on. Like we're starting to see all of these start to move. I certainly think that this was going to continue. I think the international trade's going to continue. I think the only thing we have to be on the lookout for, and we'll talk about it later, is the dollar.
Totally. We have a great dollar chart to get to. But it's not just silver, it's not just gold. It's palladium that's also working to the upside, completing a textbook base this week, getting the most overbought in years. This is what you see in bull markets, guys. You see the momentum get extremely overbought as the bulls have complete control of the trend. And that's exactly what we're seeing in palladium. I didn't bring the chart of platinum along today, but it's running into our first target, which Gold Rush Premium members are aware of. So if you're not a member, you should become one and get the key levels of interest that we're watching. But aside from the metals, Jason, it's also the stocks. The stocks just keep screaming higher. So here we have the VanEck Gold Miners ETF up 100% since April. And you can also look at something like the Gold Rush Junior Gold Miners Index, which is up 190% year to date. And this is simply just an equally weighted basket of the top 10 junior gold mining stocks. And look at how it's performed in 2025. It's just been straight up, Jason. There is not a better trade in the world than the miners.
No, I think that's the case, and it's once again it goes back to what everybody wants to know. Like, when is this trend going to end? Like nobody knows. I wish I could say, hey, today was it. Silver hit $50. It's resistance. It's the end of it. We aren't going to know that. A lot of people are going to look at these resistance. I mean, look at the resistance zone right on this chart. It stopped there, consolidated, it pulled back, and it just ripped higher. Silver could look very similar here. So I'm just saying you want to stay long these things at the moment until it proves that the trend's changed. If we start seeing reversals, we start to see the gold miners underperforming, we start to see silver underperforming on a long-term basis, not just a one-day basis, but over the last 3 months or 1 month time frame, that would tell us that this is going to change. At the moment, nothing's telling us that this is going to change. I think we stay long the miners here. I'm staying long them personally. Use trailing stops, use risk management, however you do it, but I think you got to stay long here.
Totally, Jason. And you brought along another chart of palladium futures, just a little bit more zoomed out than what I had. But yeah, you can see clear as day. I went from a distribution phase into a markdown phase. Then we had a multi-year sideways trend, and now, today, right here, right now, price is entering a brand new primary uptrend. So it looks, I pointed out earlier that the momentum's getting the most overbought in years. So, it's probably not a great tactical entry right here, but zooming out, looks like this is just the beginning.
Yes, and I brought this, Sam. I didn't see your palladium chart. I brought this one. I was like, this is a beautiful chart that I made that has colors
Well
on it
done,
and
Jason.
everything.
This is good.
And I was like, Sam's going to be so proud of me. And then Sam already bought his other palladium chart. But no, I think that this is tells us a lot about some of the miners we've been long. Like we've been long some of the miners in this space that have gone up over 200%. Very quickly too, I might add. So, some of our trades have been really playing out. And we are all across the different mining sectors, whether it's copper miners, palladium and platinum miners, silver miners, and gold miners. I think this is just another confirmation that we're in the right here to stay long the mining space.
Totally, Jason. And here, if you need more evidence of the mining trade being the best trade in the world, look at these 2025 commodity sector returns. Oil and gas has been a major laggard, not just in the commodity complex, but relative to the broader stock market as well. Like the commodity nations are doing really good in 2025, but the energy-based commodity nations are struggling. Countries like Saudi Arabia come to mind. They're dramatically underperforming countries like Peru that have a tremendous amount of exposure to rocks. And I don't think that underperformance will last forever in energy. I think this is a bull market, so the laggards will eventually catch up to the leaders. But, so far, that's not happening. So I want to continue to lean into things like GDX, XME, COPEX, LIT. Those are all great trades. What do you think, Jason?
Yeah, I mean, steel's just starting to break out too. That's a great
I saw
trade.
you got chart of the day yesterday at Chart
Yes, the
Report.
chart report,
Congratulations. Well done.
thank you.
Very
If you
well
guys
done.
are on, Twitter, definitely check out the chart report. It's one of the best things that comes into your email every day, highlighting all the things you might have missed from good traders on Twitter. It's definitely a really cool product. But yeah, so when we look at this, I think the thing that I continue to see is the rotation just continues to play out. I mean, XME, like people forget, like the miners were moving and everybody was like, oh, when's metals and mining going to move? And then it did. And then when's copper going to move? And then it started to move. Lithium miners, steel, and so on. Steel's just getting started. I think we're going to see that play out over and over again throughout all of these sectors, including energy. Coal, some of the stocks inside of there have really started to move just recently. Like this has just started
Oh yeah.
happening probably a few weeks
It's
ago.
kind of like thrusty action we're seeing there, Jason. Just
Yes.
vertical moves. The bulls are decisively taking control of the coal stocks. And just as a friendly reminder, in the last great commodity super cycle back in 2020, 2021, I don't know if that was really a commodity super cycle, more of an abbreviated commodity
It's the
super
beginning
cycle.
of it. It was the beginning
Yeah,
of it. Yeah.
totally. And, you know, coal stocks were the best in the entire world. You heard the pundits on CNBC constantly talking about names like, I don't know, Zoom and Peloton and those COVID stocks. But, it was the coal stocks were the real winners of the post-COVID boom. Things like Alpha Medical Resources, AMR is the ticker of that company. That stock rallied over 20,000% in a little over a year, Jason. 20,000%. So these coal stocks just now entering new primary uptrends. You're not late to those at all. They can go for a long time. They can go 20,000%. So
I think that's what everybody thinks at this point with anything, which is, oh my gosh, I've missed the rally. It's like when you look at past cycles in any of these stocks, you're going to see really crazy moves because these aren't the ones that like I'm never going to tell you, hey, go buy coal stocks and hold on to them for 40 years and you guys can retire on them. I'll never say that. But what I will say is over a short period of time, a year, 2 years, this is where the outperformance will live. And this is where you're going to make the most money. So, as long as we don't see any headwinds in the way, which we will update you, we update all of our clients at Gold Rush every single week on this stuff. As long as we don't see any headwinds, I think that that's going to be the next thing to really take off, which is start to see coal, and then we'll start to see energy, and some of these big moves like Sam is talking about are going to start happening.
totally. And speaking of headwinds, Jason, great segue there. We had Frey Lee ask earlier, does the dollar rally cause gold to pull back, or when gold pulls back, does the dollar rally? Jason, I do think the dollar is something we need to be thinking about as a potential headwind for not only precious metals and the commodity trade, but just risk assets and stocks more broadly. Like, look at what happened in 2021 um, when the dollar bottomed and started to rip. That's when you saw things like ARK top and enter huge drawdowns. I think ARK fell like 80% peak to trough. So like things get wrecked whenever the dollar is strong. And right now, the commercial hedgers are carrying their largest net long position since 2021, when the US dollar index ended its multi-year downtrend and shifted into a new primary uptrend. So I have a hard time thinking that the commercial hedgers are going to be wrong again, Jason. Yeah, I know there's a lot of evidence out there that suggests weak dollar. Like, a lot of these commodity nations are very strong. Look at precious metals, go down the list. Like, there's a ton of evidence that suggests the dollar should be weak. But man, this is a difficult chart um, to deal with because if the dollar gets back above 100, I think that's a major red flag.
I would say this, which is I do think they will be wrong in a different way. So when you look at this chart, what you're seeing is this massive bottom that happened in 2021 and reversed. What were we looking at there? Well, we were looking at the Fed raising rates. So the Fed raising rates usually gives a boost. Short-term rates are usually like things you're going to have, like money markets and so on, will be affected by this. It'll bring the short-term rates up. So when you bring the short-term rates up, you're going to have people go more into cash. And so that's kind of the scenario that we were seeing in 2021. Also, we weren't seeing any money really flowing into any of these international markets. So because of that, also that was another negative on basically the dollar moving down. So we were in a very strong dollar cycle there, which makes perfect sense with raising rates and money really not flowing outside of the United States. And not to mention, we started to have a little bit of global turmoil. People always run to the dollar. I always call the dollar the panic currency. The reason why I call it the panic currency is because when people are panicking, they run to dollars. It's a safe place to go. It's also
Is it the only safe haven, Jason?
anymore. The Swiss franc, I'd say, is in there. The yen used to be. So my list was always the yen, the Swiss franc, and then at the end of it, it was the dollar. Now it's more the Swiss franc, the dollar, and mainly the dollar always goes up when people are panicking. But that doesn't always lead to big reversals. That might just lead to spikes. And that's what I'm seeing today. I think we're just going to see a spike in the dollar. I don't know if like it's going to be short lived and we're going to hit 101 or 100 and just turn around right there. I don't know if it's going to be more of a bigger rally than that, but either way, I do see a lower high probably coming in the dollar. I see us kind of getting out of this positioning mess that it's in already. We start to get back to more shorts in the commercials, and then probably we'll start to head lower with the dollar again, which will give a boost to all the things we're long. I think the market's telling us this. If you look at 2021, yes, some of these commodities that were very tied to the Russia-Ukraine crisis were bouncing like crazy. But so things like gold, silver, and so on weren't doing very well. So if we look at that and we go, okay, we're seeing international markets are going crazy. Gold is going crazy, silver is going crazy, palladium, platinum, gold miners, copper miners, lithium miners. You could basically run down a huge list. I could keep this going for probably another 20 minutes, but I'll stop there.
I know you could, trust me.
but just saying, like, when we look at it that way, now we can say, okay, well, the dollar's probably short-lived here. Once again, anything can happen in markets. I'm not saying like you can't be right to be long dollars here. I'm saying anything can happen in markets, but with the Fed lowering rates and with all of the things that I'm talking about right now, I would be very surprised to see much more than a big spike in the dollar and a lower high and it to just roll back over again.
But do you really think the Federal Reserve can keep cutting interest rates, Jason? Like since they cut 2 weeks ago, 3 weeks ago, recently, interest rates haven't gone down. Interest rates have gone up. It's the market's way of telling the Fed that they're dead wrong and interest rates should be higher. And I don't disagree. I mean, look at how risk assets have done. Stocks are at new all-time highs, Jason. How can
I
the Fed be
agree.
cutting in a cycle like that?
I agree, but the Fed's already starting. I think that it's multifaceted. One is the political landscape. if we look at what's going on, like people, hey, you're not going to lower rates. Hey, we might just remove you then. We might just replace you with somebody who will lower rates. And not to mention, let's be honest, most of the people who are in power, whether it's politically or through the Fed, they're over 60 years old. So they're not really afraid of more inflation happening. Most of them have already built wealth, they have assets and so on. So more inflation, probably the better for them. Hold up the retirement accounts, hold up the housing market, hold up stocks, like whatever it is, you're going to kind of get more inflation. They'll probably be a little bit more insulated than everybody else on that. So I don't think that it's going to be hard to really push the Fed to continue to lower rates here. I don't like you said, like, I think it's ridiculous. I don't think it's something that they should be doing. I don't think it's something that I'm like, hey, this is a great idea. I think Powell was dead right, which he said, if we lower rates, we will see inflation come back. I think we will. I think it'll be nasty, but until I think it gets nasty, we won't see them change anything. Think about it similarly to 2021. Inflation's transitory, and you and me, looking at markets, trading, looking at the assets and going like, what the hell are these guys looking at? Because we're sitting there like every day, like, okay, I'm like, okay, oil's up, 5-10 days in a row. Every single commodity, basically besides gold and silver, was just up every single day at that point. And I'm just going like, this is getting completely out of control, and they're just sitting on their hands. So they're always a little bit late to react. And like, I think that's going to be good for us as the people holding on to these commodity based assets. As long as they keep being late to the party, like, we're going to win. And that's the goal, is to continue to understand what they are, what they do, but read between the lines. They're not going to be quick because they're not looking at charts like we do. They're not looking at oil or gold or any of these commodities and saying, this is what we need to do. They're looking at lagging indicators, core PCE, CPI, random things that are generated a month after the fact. And these are also weighted in a weird way where sometimes inflation doesn't show up for a little while. So I think that's going to be kind of our biggest catalyst to continue this trade. And I think when they change, when they shift, like, that's going to tell us something that's going to be, okay, maybe now's the time to start looking at this trade a little bit differently. But until I really hear, like, all the news out of the Fed is like, they're trying to be hawkish, but they're like, yeah, but we're still going to cut rates. And it just
Right.
cracks me up every time, because it's like, they'll talk very tough and be like, yeah, inflation's real. And, we have all these issues in the United States and we need to fix them. And then the next sentence will be like, but we are all, down to lower rates at this point. It makes a lot of sense. So I think they're just towing the party line at the moment. And that party line is saying, we're going to cut rates. As long as they're going to say that, feel that, and it's going to show up in the Fed rate probabilities, I would bet that's going to head lower. And I bet that's going to continue to put pressure on the dollar. And when they change that, though, that's when the dollar is going to get very strong.
Gotcha. And, this next chart does a great job of showing how the commodities have been stoking inflation. Copper overlaid with the 10-year US Treasury yield. It's almost a perfect chart, Jason. There are some significant divergences that have marked key turning points, but over the long term, copper and the 10-year, they dance together, and copper continues to climb higher. I know we had that massive drop earlier this year after the tariff man messed with the copper futures. But if you look at something like CopX, the copper miners, they have not slowed down at all. They're pushing new all-time highs. So this makes you think we probably need higher yields, not lower, right?
Yeah, so if you look at today, I just wrote a piece on this for the Gold Rush Bond Report. We cover everything at Gold Rush, from stocks inside the commodity sectors, and not just gold miners. We cover energy, coal, all the ones you guys have already seen us name, bonds, currencies, basically anything in the macro markets. But looking at that, when I look at this chart, what I see is the fact that copper is still really telling us something. And Sam, you and I remember, like, copper fell and everybody in the world was writing us like, oh my gosh, the commodity cycle's over, copper fell. And and
It was like the worst day ever for copper.
Yes, and it was a big move, but once again, like as a commodities trader, like I'm like, okay, this is pretty normal in the commodities market. There's very strange moves that happen very quickly in some of the more illiquid products, copper being a little bit illiquid. So that happened. And I kept saying like one, it held 425, which was my main level to go, okay, we're still holding trend as long as we hold 425. And then if you look globally, you look at Chinese copper futures, you look at the LME copper futures, they didn't fall nearly as much as ours did. And then if you look at the copper miners, that's the area that we've been investing in pretty heavily. And we're seeing those copper miners continue to just hold up and show relative strength to copper that whole time. Now copper is moving back up. It's over $5. At least it was the last time I looked. I think it was at 510 in the futures contract. I think that was December. So looking at that contract at the moment, I'm saying, okay, there's probably a lot more upside here. And copper over $5, I think yields get back over 5% once again in the 30-year. I think that'll happen soon. I think the 10-year will probably follow it as well. So I think we're at a scenario here where we want to continue to watch copper. Let it tell us what's going to happen with bonds and yields because I know everybody's watching TLT. TLT looks very cheap right now. Looks, it's almost too enticing for people. They just can't even stay away from it. And really, it's like if we're looking at energy and saying energy is probably going to move at some point, if we're looking at these international stocks and seeing them move, I would think we're in an environment that's going to say higher yields for now. Not to mention looking at global yields. Global yields have already moved over these levels and have started to break out of that zone already. So I think that's like in the United States, I think we're going to follow that plan. I think the long end's going to continue higher. I think, like Sam said, how can they lower rates into this? I think other people besides Sam and I, who are much more of a bigger influence in these markets, like countries and big funds, are also thinking the same thing that hey, if we're going to continue to lower rates on the short end, the long end will probably go higher, meaning the long bond yields. So long bond yields moving higher, there's going to be more inflation. So they're betting on it too. So I think like this.
Totally. Look at a country like Poland, Jason. They
Yep.
bought like 18 tons of gold in Q2.
Yes. So
Poland.
why did China do that? Why is Poland doing that? Why are these countries
China's
all
like
doing
fifth
that?
on the list. Poland is backing up the truck and loading up on gold. Like,
No, I'm saying China's been doing it for years. Like they're
yeah,
probably holding wise, they're much more over Poland, but Poland now, like you said, like they're into it. Now they're backing up the truck and taking the I think the biggest position they've ever had in gold. So I mean it's so interesting to kind of see all these countries kind of seeing the same thing, which is inflation's probably going to take off. And there ain't anything you can do about it but prepare for it. Here at Gold Rush, we've been doing well with that, and that's the thing that I've always tried to do about or with finance, which is understand what the market environment is, protect my clients' money, because at the end of the day, it's like, yeah, we could all be in, let's say the S&P 500, and let's say that stays stable with inflation some years because we see some of these assets like gold, silver going up a lot higher. That's great and all and fine if you have a retirement account, but if you're really trying to outperform you're really trying to make some money, you want to be in these other areas that are going to do really well in these type of environments. And I think we're there right now where inflation is really taken off. It's just bottoming out right now and it's going to start moving like crazy. I think if you live in the real world, you've already seen it. Go to the grocery store. Nobody's saying inflation's going down if you haven't looked at the market. So go out, live your normal life, and you'd go, man, inflation is really heavily here still, and it's here to stay and I'm going to want to be in these areas that are going to outperform, like lithium miners, copper miners, gold miners, coal, you name it. That's what I want to be in.
totally. I'm with you, Jason. And the last chart you brought along was the man, what a divergence this is, Jason. Crude oil and the 30-year Treasury yield. TYX is the ticker symbol for all you gamers at home. But man, as we mentioned before, copper is a great leading indicator for yields, and crude oil is the same. These assets, they are inflation. If crude oil is going up, that is inflation. That's affecting all of us, not only at the pump, but in so many different products. Higher crude oil is inflation, and it will cause the 30-year yield to rise. So, do you think crude oil is about to complete this massive top, Jason, or is the 30-year yield kind of telling us that, hey, crude oil is probably undervalued here and it is due for some mean reversion higher back towards 80?
So it's a tough question because, saying exactly what it is going to be hard to figure out. But my experience and back testing tells me the fact that crude oil is probably headed higher. Really, if you think about it compared to the broad market, compared to inflation globally, we're looking at pretty low crude oil prices in comparison to stock prices, like insanely low. And if we look at Saudi Arabia and OPEC, like they're going to want higher oil prices at some point, or their economies are going to start to slip as well. So I do think that we will probably see oil move higher. I think it'll catch right back up to the 30-year yield at some point. So I think that's going to happen soon. I think the biggest thing to keep on everybody's radar right now is like what's going on with oil, what's going on with the XLE, the energy sector. Make sure the coal, lithium, copper miners, make sure those are all still moving the right direction. And I think at some point we're going to see this trade really catch up to the other one. And as I've talked about before a bunch of times, my line in the sand for crude oil is $80. We get a close over 80, I'm going to be really bullish on crude oil. You want to front run that, go ahead, but I don't like front running commodities. You can do that in stocks. You have mean reversion in the stock. You can make some money in that. Most of the time in commodities, if it starts to chop around or if you're looking for mean reversion trades, it's going to just continue to head lower. So I'd rather wait for that breakout, and I'd rather wait to see XLE show some relative strength as well.
Totally. I don't think it's far away, Jason. I think this is a fantastic chart. The bond market's calling bullshit on the energy markets, and I'm here for it. I want another energy bull market because those were amazing to trade.
Oh yeah, and I think it's
And
coming. It would be it's a thing I've said before, Sam, which is it would be the first time in my career and the most surprising thing I've ever seen in history if all of those sectors moved and the energy sector just laid there flat.
yeah,
That's never happened before in history, so I do think by year end we'll probably see XLE way over 100.
totally,
That would be my next
Jason.
call.
And we're going to
XLE
be
to
pounding
110.
the table at All Star Charts Gold Rush, covering it constantly in our energy reports and commodity reports. We cover it all at All Star Charts Gold Rush, but when a big thing like precious metals soaring to new highs or energy entering a new bull market, whenever something like that happens, we go really deep on what's happening, and we outline a ton of different trade ideas. Um, and we do it all across macro, whether it's gold, commodities, currencies, bonds. We do it all, and we're crushing it, Jason. And also, we don't talk about this enough, Jason, but All Star Charts Gold Rush members get access to our rangefinder platform, which is just such an extraordinary piece of software that puts all of our trade ideas into one easy to use software. So you can identify which trade ideas are near the entry point, or which ones are near the target, or which ones are having the biggest moves today. You can filter our trade ideas a million different ways, and it really helps you use the research that we're constantly putting out at All Star Charts Gold Rush. And all of this research is $12.99 a year, and of course, we'll give you a 30-day money back guarantee. So if you decide it's not for you, we'll give you your money back, no questions asked. But I have a feeling you'll like it. So come check out what we're doing at All Star Charts Gold Rush. We're covering everything we talked about today and a lot of trade ideas with our entry and target levels clearly highlighted. So, yeah, come hang out with Jason and I. We also have Ricardo on the team at All Star Charts Gold Rush. We need to get him on these videos more often, Jason. Rick is absolutely crushing it. He does a lot of excellent work with currencies. And yeah, he pointed out the Israeli shekel to me earlier today. You know, nobody else out there is talking about the Israeli
No,
shekel.
he's always
Great
on it with
prices.
those. Yeah, he's
He's
always
the
on with
man.
those. Love
He's
it.
great. Totally. All right, everybody. Thank you for being here. Frey Lee, we've got Bub in the chat. Robert Coffee Doggy. What a great name. Coffee Doggy. Love that. Appreciate all of you being here and supporting our work here at All Star Charts Gold Rush. If you want to learn more about what we're doing, click the link in the description. And we will be back here at the same time, same place next week for another great episode of All Star Charts Gold Rush Live. Until then, stay safe out there.